Hi and welcome back to Cheeky Crypto. Today guys, we're going to be jumping into the world of Cardano, seeing what's been going on most recently with the price action of ADA and what I would expect to happen next. As I get into this video, if you find it useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe, tap the bell, select all notifications, and in doing so you will be kept up to date with everything that we do here at Cheeky Crypto. Okay, if you've not yet joined us in Discord, links in the description down below. Fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there. So why not go ahead and check it out today? And if you're looking for a little bit more from the crypto space, everything from bear market strategies through to project reviews and trading, why not check out the Patreon as well in the description below? Okay, so Cardano paired up with USDT on the hourly chart. Binance is the data source, and we are tracking this as a big move down. Obviously, it's collapsing down much deeper than maybe we were expecting it to. And if I actually just zoom out into our daily here for a second and just bring that into scale, you can kind of see exactly what's going on here. Big pullback here, big pullback coming down even lower. Okay, so I do want to kind of just reflect on what this looks like, what we are expecting to happen next, and all of that kind of good stuff, because we are tracking this as a pretty deep retracement from the all-time high at the moment, but it isn't too bad in reflection to everything else. And this down here would be our wave one high. Okay, that comes in at about 15 cents, so we're way off kind of breaking the structure as far as I'm concerned there, specifically on the kind of larger scale of things. So that's all looking pretty good in my opinion, but we are of course correcting down pretty deeply here. So let's go ahead and jump into this and see what's going on. So if we come in here, we can see that we've got some kind of move up and then a pull back down afterwards, and we can see here there's a bit of a bounce, and we could potentially pull back down even more. And so when we take a look at this from a bigger kind of correction point of view, we can see there's a couple of bounces in all of this, and again we might want to kind of look at that and think, oh, it's a 5-wave move, but it isn't. It's simply over corrective, so lots of overlap, etc. So instead of what you think that is, it's not 5 impulsive waves, but it is basically 5 corrective moves coming on down here. And obviously the sub-wave counts are 3s rather than 5s. Okay, so it's not an impulsive structure going down here, which is positive because it means it's all corrective. So if we were to just take a look at it from a real macro level, you would have it like this, and you could see how that could pull back down quite significantly from there. Okay, so under super bearish scenarios, then ADA has quite the way to go. However, it's important that we also reflect on where it's come from. So if we take that high point and we take its recent low down here, it's dropped down 81%. Okay, now if we think about what bear markets normally are like, it's important that we explore, how low this thing might actually end up dropping, right? People talk about, bear markets going down 90%. That would put us down at about 28 cents or so. If you were to come down to the 95%, you're talking about 15 cents and completely breaking the structure of the entire thing. Now, those are possible, as everything is in crypto, but I think it's important to reflect that actually, the market is actually much, much more mature than it was previously. So expecting the same results as you were seeing in the previous bear market cycles, and assuming that you're going to go down to 95%, I think is a little bit on the foolish side of things. So instead, what we want to do is we really want to take a good kind of approach to this that doesn't necessarily put us at at risk of, I guess, not having any exposure at these cheap rates, waiting too late to jump into the market. So as I said, right, we've got a scenario here where we've dropped down from the all-time high by 81%. Okay, so if that is the case, then where would we want to dollar cost average, right? Obviously, if we're just taking a look at this from a percentage point of view, we could be looking at this and thinking, okay, well, if all-time high was there, up at $3, then essentially we've dropped down 80% of that value. It's an 80% discount. Are we waiting for a 90% discount? Are we hoping for a 95% discount, right? What are we waiting for? Or do we want to start dollar cost averaging anything less than 80%, right? Because essentially that is where the millionaires are going to be made. They're going to be made anywhere, in my opinion, lower than 80%. Okay, if you had an 80% retracement, then this is where we want to DCA. Okay, this is important because essentially what you're going to do is you're going to slowly work our way in as that price might pull back down ever so slightly lower, and basically you're going to lower your average purchasing price as you buy this dip, right? This is the particular dip that you want to be buying, anything lower than 80%. in my opinion. So what you're doing here is you're basically building up a very strong position at a massive discounted rate ahead of that next impulsive surge upwards, right? Which will be absolutely insane, because that is where the millionaires are made. They're made when the prices are all the way down at these low levels with significant drops in price, okay, without people, I guess, without adding to your risk in any way, because I mean, there's always going to be risks associated with what you're doing. But what I mean, I guess, is that you're going to dollar cost average. Your price is going to drop down. Your average price drops down as the price drops down as you continue to slowly dollar cost average, right? This is not buy everything here in one go. It's buy 10% here, I buy 10% here, I buy 10% here. And if it gets that reversal and it starts moving up, you buy 10% here. You dollar cost average the entire thing, so that when you're up here, your purchasing price is somewhere down here. It might be, ideally, you want it to be lower than 80%, right? You don't necessarily want it to be higher than that in an ideal world. And this is a strategy that works really well. Join us in Discord and Patreon if you're looking for more on this. But essentially, this is kind of what me and Chris did way back down here, okay? We saw all of this stuff going on, and we're like, okay, cool, we're getting very, very close. We know that Bitcoin's bull run started here, okay, in 2019. We then obviously saw the pandemic crash of March 2020, and that, bam, that is where our value was, right here. We were buying this move up and this move down. Then we didn't have to buy much more after that, okay? Basically, we just dollar cost averaged our positioning, okay? So you've kind of got a very similar opportunity here, right? You can either wait until you're starting to move back up and you can buy your way up, but that's never a great idea. In a roundabout way, we wished we'd actually bought this one on the way down. It would have been cheaper, okay? So important that we understand that anything lower than 80% is absolute steal, in my opinion. And I also think that we're not likely to drop down too much further. I think 90% is an extreme end of the scenario here. I'm not thinking that's actually something that's going to be probable. And the reason for that is if we take a look at the stochastic RSIs, you can already see that we're oversold here on the daily. This is going to move up. The weekly oversold, the monthly oversold, the 8-hourly does need to come back down, okay? The 4-hourly does need to come down, and the hourly needs to come down. So there's smaller time frames, we're looking for corrections to the downside, but the larger time frames, they're all getting ready for a big move to the upside, okay? So it's important that we understand that now is not necessarily the time to be panicking or thinking that, we're going to sell everything or anything like that, or any of that nonsense that you might be seeing in the space. Now is the time of accumulation. Now is the time for continued purchasing and dollar cost averaging into some absolutely fantastic positions. Don't look at the dollar value of your portfolio, look at the number of coins and make sure your coins are increasing during these times of volatility, not decreasing, okay? That's kind of how I look at it. And then you'll thank us much later on in 2023, basically, once this is significantly moved up. So that's kind of the strategy that I want to kind of put in this video. Now, I do want to kind of talk about this move down here ever so slightly. You can see that we have this ABC push up, then ABC push up, ABC depth push up, right? So this is actually pretty interesting. So if we were to measure this move right here to that high right there, transpose it to here, you can see that we've actually pulled back down right into this sweet spot we bounced. And just after that, so again, that's not really an impulsive structure. We don't have the 5-wave count in these either, so that doesn't work. And here you can basically see it's a straight drop down here, and then we bounced up. And I do expect a little bit more of a downside here, but we seem to have actually bounced up reasonably well from here. So if we actually take a look at that bounce, we moved, where are we? So from some trading opportunities, let me actually zoom in on this. There was some pretty good stuff going on here. Now it's obviously high risk, but if you're in this one, then you did pretty well. You got yourself 20% on that move there, right? So just kind of be aware that there are ways that you can make a lot of money or to accumulate more coins just by taking advantage of these pullbacks and pushes up afterwards. But right now we should be thinking of a little bit more of a pullback here anyway. So this bounce is an interesting one. We could argue that this is actually looking for a bit more of an upward move than a downward move. But obviously if we lose that low level just down here, and then that comes in at the low of 58.3, then we would go down ever so slightly lower. But for the most part, that would actually chalk us up as a bit of a correction complete. So I will go ahead and just do this. I think if anything, what we've got going on here would be this as a W, X, Y, X, Z, that kind of pattern. There's no kind of impulsiveness about it. It hasn't got the right wave counts for that. So if anything, that's kind of what we're looking at here, in the same way that we're kind of looking at it over on this side as well. On a macro scale, I think it's also the very same thing. But yeah, you kind of get the idea. And I'll just make this a little bit easier to read. I'll just use the ABC function. So we go A, B, and C like so, okay? And then we have some kind of ABC and then fall back down again. So essentially we're coming to the kind of close here. We're looking to kind of finish this off. It's a corrective pattern after the impulsive move up here. And that's a 335, by the way. And so basically what we're looking for is some kind of double or triple corrective play. And it's really quite a complicated one, but essentially we are getting closer and closer to the bottom of it. Specifically as we start to pull back down with Bitcoin, and one last little move going down lower, in my opinion. So as I said in the Bitcoin video, now is not the time to be selling anything. Now is the time to be accumulating everything. You do not sell when you're at an 80% discount from all-time highs. That would just make no sense whatsoever. So there's a lot of unfortunate videos and influencers out on TikTok, Twitter, YouTube, or whatever, saying that they're selling everything and clickbait and whatnot. These are people that you don't necessarily want to buy into that kind of narrative. There's ways of looking at data differently, and then there's ways of looking at data and not understanding what you're actually seeing, and unfortunately I think the latter is happening quite frequently across the space at the moment. So if we reflect on the data is suggesting to us an accumulation is going on. Now is the time for accumulation. As I said, anything lower than 80% to me would make the best dollar cost averaging scenario for a long-term hodl. Guys, I'm going to leave the video there. If you find this useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe, tap the bell, select all notifications, and in doing so you will be kept up to date with everything that we do here at Cheeky Crypto. With all that said, done and out of the way, I hope everyone has a fantastic day, and I'll catch you all in the next one.